Good evening, everyone. Welcome to Closing Comments here for February 10th. Let's jump right into our charts and see what happened in the markets today. First up, we got our April live cattle on the board. We continue to see this live cattle market balance out and consolidate here right on top of this rising 20-day moving average. So far, to start off this week, we've had two tight range days here, staying right on top of that support line. At the moment, though, we have seen prices starting to tighten up, but pressure being put down here on this 237 level, which was today's low. We just want to be cautious as offers below 237 could send us for a quick probe down into this 235 to 237 area. Over the last 3 weeks, we have seen a pretty good buying pressure coming out of this spot, but has been some pretty quick sell-offs that get us down into this zone before getting bought back up. We do expect to see that support continue to hold if we do dip down into this area. We just want to encourage everyone to be cautious of some increased volatility if we do start to slip early tomorrow. We could see some quick probes down into this area. We do have support all the way down here to this 231 and a quarter area, which is our current 20-day low. This market still remains in a nice uptrend as long as we are trading above this level. So we should expect to see good buyer support if we need it. And if we do start to pay a visit down into some of these lower areas here, we should see the buyers continue to come in and support this market. I just want to be cautious as this is a pretty big wide zone here, nearly $6 in between, that we could see a little bit of volatility here while we're trying to pick up some leftover buyers. In the meantime, this market still remains in a nice uptrend. Higher highs and higher lows still keeping a nice shape and structure to this market. We want to see this market continue to hold that 20-day moving average early tomorrow and see a nice push back up into the 240s. So far here, the bulls do have a couple overhead targets. We do have that gap that we created from last week's breakdown Thursday morning. We did try and fill it there on Friday, but we weren't able to get that full thing filled. So we do have that being target number one up here at around 241. Look for the bulls to try and come back up here and fill that spot. From there, it should be a pretty easy cruise up here into back to the current year's high. And then from there, the target is going to be this overhead gap that we still have yet to fill, dating back to October of last year. Like I said, this uptrend still remains intact. We do have potential for good support down here if we need it, dipping down into the low 230s. But we want to see the bulls try and get some early bids rolling tomorrow and get some movement in this market after a couple tight range days to start out the week. Look for the bulls to try and get good support early tomorrow and try and turn this market back up into the 240s. Next up, our March feeders on the board. Today we did see a little bit of weakness here in this feeder market as it did pull back and finish back down here below 365 and that prior day's low. This market still does remain in good bullish territory, good uptrend, still in shape here. This market has continued to follow that 20-day moving average all the way up here over the last couple months, and we expect to see that trend continue. Look for support early in down here near this 20-day moving average tomorrow if we need it. This market could see a little bit of a fall through the downside here, but we still have a lot of room down below us that we could see some good buyer support in this feeder market. Anywhere between this 20 and 50-day moving average should act as good support. Hopefully we don't need all that room, but at the moment we just want to be aware that we could still see a good dip buying opportunity if we come back down into the 350s. However, this market has showed good support at that 20-day here throughout the last couple months, and we want to see the bulls continue to hold this market and keep pushing it up. Wait for this thing to balance out, tighten up, and we should see it start to head higher here over the next couple of days once both live and feeder markets are able to find some good support. Next up, our March corn futures on the board. Today we did see just a little bit of choppy action here right around yesterday's range. Price did poke back up towards that 20-day average from below before getting rejected. At the moment, this market has just been pretty choppy and doesn't seem to be super concerned about making big directional moves. We have been capped last week up there around 435 where we needed to see that resistance holding at these prior range lows. At the moment, this market is still in bearish territory as long as we're trading below these major moving averages and 435. If we do see some bids above today's high, we could come back up and try and retest that level once again and try and pick up some more sellers. The momentum still favors the bears here at the moment, but we just want to encourage everyone to slow play this thing as this has just been a pretty choppy market. And let this thing try and start to slip back down here below these current week's lows and get some momentum rolling to the downside as the bears are trying to get a nice downtrend in order here. Next up, we got our crude oil market on the board. We have had a pretty choppy couple weeks here after this market has been going through this short covering rally. Anywhere between 62 and 66.5 continues to be just nice range trade here. Pretty choppy action here in the middle of the range, so don't really look to get involved here while we're diddling in the middle of this range. We want to see shorts get active up here in the 65 to 66.5 area, and continue to see good support down here near 62 to 62.5. Look for this choppy sideways action continue in this crude oil market. Doesn't have a whole lot of legs in it to get going to the upside here at the moment. We should see this market remain sticky here in the $60 range for crude prices. Next up, equity markets tightening up a little bit here today. Did see a tight little range day here back up near the prior week's value area in the S&P. The Nasdaq being the weakest of the bunch, rejecting off that 50 today, but still seeing some tight range days here as well. The Dow continues to show relative strength as it pushed up into a new all-time high today before settling back into the close. At the moment, this market is continuing to rally here in the Dow Index. We continue to see good relative strength over here, so stay exposed to these sectors and these stronger names that continue to see good upside. In the meantime, we should see more volatility here in the Nasdaq, starting to see a little bit of rejection up here off the major moving averages, and those mega cap names are still a pretty mixed bag at the moment, so we could see a little bit more downside in the S&P and the Nasdaq while they kind of sort up through that mess. The Dow is going to be where the strength is. I encourage everyone to remain long and strong in these sectors and with these names, but just continue to be defensive here while the Nasdaq and the S&P try and find their footing and create a little bit of structure here that we can trade around to the upside. In the meantime, we could see a little bit more downside over the next couple days in this Nasdaq index as we are starting to run into some resistance. That's all we got for today. Thank you everyone for tuning in tonight. Catch you guys tomorrow.